Welcome to weekly view on markets. Markets are in a consolidation mode during this week, and Nifty was up by just 29 points for the week. Volatility index in the market has increased. Mid cap and small cap indices corrected more than 2% during this week. So investors' portfolios are down as broader markets have corrected during this week. Valuations of mid and small cap indices have gone up sharply recently, and some correction is good for the markets after a sharp run up. Long term charts look very healthy, and investors should use the corrections or the dips to buy good quality stocks. GDP growth estimates and forecasts have been revised upwards. Economic fundamentals of our country are quite strong. So investors and mutual fund investors should continue their investments, SIPs, and remain invested to get the benefit from our growing economy. Now let us look at performance of indices. Nifty has closed at 24,530 with a gain of just 29 points, that is 0.12%. So in last week, I had discussed that market is set for a consolidation, and that is what exactly has happened during this week. Bank Nifty has closed at 52,265 with a loss of 13 points. Mid cap index corrected at around 2.21%, that is, it was down by 1,265 points. Small cap index was down by 551 points, that is 2.91%. So there was selling in the broader markets indicated by mid cap and small cap index. That is why investors' portfolio are in losses during this week. India VIX has gone up by around 8%. It is at 14.82. So due to the volatility going up during the week and intraday, the India VIX, which is indicating the volatility in the market, has gone up. And next week, union budget is going to be announced. So in view of all these things, the volatility is further likely to go up in coming days. Information technology sector gained about 2.31%. FMCG sector gained about 2.28%. PSU Bank index gained about 1.38%. Consumption stocks gained about 0.41%. There were more number of sectors which in the red during this week. Media sector lost more than 5%. Metal sector lost about 4.65%. PSC, public sector stocks, lost about 3.92%. Commodity sector lost about 2.98%. FM, manufacturing, consumer durables, energy, infra, all sector lost between 1 to 2%. Oil and gas, pharma, auto, all lost about 1%. So with the most of the sectors in the red, the broader market was in the negative during this week. Now let us look at charts. This is the daily chart of Nifty. Here we can see due to the selling, Nifty has made a big red candle. This is called bearish engulfing, and this indicates some weakness in the market in the coming days. And also, the budget session is there. Maybe ahead of budget session, investors have booked profit. So investors should remain cautious in the coming week. And support for Nifty is at around 24,250, and next support is at around uh, 23,500 to 23,600 level. If Nifty by chance drops to this level, it will be a good opportunity to buy stocks. This is the chart of Nifty Midcap Index. Midcap Index also has seen continuously selling in last three sessions. We can see three red candles, and Nifty has support at around 55,900 and followed by 54,200. So if Nifty Midcap Index falls at around 54,000, it will be an excellent opportunity to pick good quality mid-cap stocks. This is the chart of Nifty Small Cap Index. The small cap index has good support at around 18,300 to 400 level. This is the chart of Bank Nifty Index. After hitting at around 53,000, Bank Nifty has shown a consolidation and uh, correction, and now it is at on the support line. You can see it has closed on the support line. So I expect that Nifty Bank Index should consolidate or pick up from these levels. Now let us look at some of the macroeconomic fundamentals of the market. Macroeconomic fundamentals of our country continues to remain quite strong. RBI forex reserves is at a record high of $666.85 billion. At the end of this week, it is up by $9 billion for this week. Forex rate is at 83.66 per dollar, and dollar index is quite steady at around 104.37. Crude prices have come down from around $85 per barrel to $82.56 per barrel. So dropping crude price is a uh, good indication for Indian economy and for the markets. Gold price is steady at around 73,016 for 10 grams, 24 carat. And internationally, slowly the demand for gold has been coming down. We can expect the gold prices to either consolidate at present level, or we may see a small correction in the gold prices in the coming days. FIIs have bought 10,946 crore during this week, and DIIs have sold 4,226 crore in equity during this week. Continued buying from FII after the election results and government formation at the center is giving good support to the Indian markets, and this trend of FII investment is likely to continue. So, in view of this and good inflow, record inflows into the mutual funds, and that money is by mutual funds is coming into market from domestic institutional investors. So, the good flow into the mutual funds, that is by DIIs and FII buying, will give a good support to the market. I don't see any big reason for a correction in the market. One worrying factor is that WPI inflation for the month of June has slightly increased. It has come at 3.36% from earlier of 2.61% in May. So this is higher inflation is attributed to the high food prices, that is food, vegetables and fruit prices. And with a good monsoon, the prices of vegetable and fruits is likely to come down in coming months. So if WPI inflation starts dropping, then the RBI Monetary Policy Committee may look at reducing interest rates in coming months. If the inflation trend continuously starts coming down, there are good chances that there will be a rate cut in US, and that will be followed by RBI also by the end of this year. India's GDP estimate for current financial year, that is the FY25, has been revised from 6.8 to 7% from IMF, that is the International Monetary Fund. So the forecast of GDP being revised upwards is a good news for economy and also for the markets. So markets will be volatile in the coming week as budget announcements are due. Traders should minimize their position in view of the increased volatility during the budget session. Mutual fund investors need not to worry about short-term fluctuation in the market. They should continue their investments. This is all for this week. If you like my video, please subscribe to the channel. You can give your likes, ask your questions. We'll meet again next week. Thank you.